Here's what goes through most of our minds when we think about filling out one of these during tax season. Confusion, discomfort, and maybe just a free-falling sensation. But knowing what awaits will certainly be unpleasant. To help all of us prevent these feelings, we brought in...
I'd like to talk to you about something vital to all of us. Please be generous.
Yeah, not him.
Ooh.
This guy.
Hi, I'm Greg Rossick. I'm a tax partner with EY and contributing author to the EY Tax Guide, and we hope to make your tax filing a little bit easier this year. There's 7 tax brackets right now. You really ought to know what your bracket is, and I'm not talking about March Madness and what your bracket is there. We're talking about your income tax bracket. So know, what you're being taxed at, that top level. But once you know that, you'll know how much that next level of income is going to be taxed at, or if you're going to get a deduction, what your after-tax cost is going to be on that. So if you're walking around, someone asks you about your bracket, I bet they're talking about your tax bracket.
A tip of a flip, 2 points.
But the main thing is to really think about your personal situation. So did you get married, get divorced, had a child, change jobs? And rather than try to understand the entire tax code and all the provisions in there, let's just focus on what's your situation.
Single and ready to mingle.
Maybe you're a teacher and you spend some money on school supplies. Well, you can actually take a deduction for that up to $250, and it's an above-the-line deduction, which are ones we like much better because you get a straight deduction for those. So if you have a business, let's say, and you have a guard dog that guards the yard outside, and you can actually deduct the dog food for that because that purpose of that dog is a guard dog to guard your business.
And now, the name of the winner.
Right, so a lot of times when people do gambling and when you have those big winnings from that, that's oftentimes taxable to you. The good news on that is that you can actually deduct some of your losses that you have, but only up to the amount that you won. A lot of people don't like to admit that they lost more than they won, and for taxes you don't have to.
That's the ball game, folks.
So there's also lots of mistakes people make every year. You might want to make sure you're claiming the right dependents. So the obvious ones, if you have kids, they're dependents, but maybe an elderly relative that you take care of can be claimed as a dependent as well. Other things that people overlook sometimes are in the sharing economy. So if you used your house and lent it out or swapped houses with someone for a period of time, that can actually be rent income that you have depending on how long it was that you rented that out.
Oh, but remember,
pets are not dependents. No, they may depend on you, but from a tax perspective, they're not a dependent that you can claim.
So hopefully you feel a little less and a little more during tax season.